Rand Merchant Bank recently released the 8th edition of its Where to Invest in Africa report. And this report analyzes 53 African economies according to their investment attractiveness. With me is Celeste Fauconnier. She is an Africa Analyst at Rand Merchant Bank and one of the authors of the report. Celeste, how do you measure the investment attractiveness of an economy?
Well, there are definitely many ways you can do that. We try and keep it as simple as possible because we've got such a wide array of clients and different sectors that our clients work in. So what we found most interesting of Africa is the economic growth that we see, the large markets that we are seeing. So looking at the economic component of every country, and then we overlay that with what I think is the most important aspect with looking at when you're investing in a country, that's your business environment. So how risky is it to get in to the market? How easy is it to get out of the market? So what we do with those two components, we give it a 50% weighting each, and there's the rankings. So even though, as I mentioned, it seems like it's a very simple ranking, underneath each of these pillars, specifically the business environment side of the methodology, there are probably 100 pillars looking at things like politics, looking at infrastructure, looking at how easy is it to repatriate your dollars out of the market. So there's quite a number of aspects that are taken into consideration.
The theme of this year's report is infrastructure. Why infrastructure?
Yeah, well, starting with that, it's probably your second, third most problematic factor for doing business in Africa. The first one, we can briefly just go into that, is access to financing. That was in fact our theme for our last year's edition. So basically the liquidity in the market. How easy is it for clients to get money in, money out, and for your service providers to get money to get back to your client. So essentially now we're looking at the second most important aspect, and that's infrastructure. So we do know that Africa has a massive deficit, but it was even more pronounced when the African Development Bank rewrote or reassessed what this deficit is. So a few years back, they did the report, and it's $90 billion that's needed every year to build infrastructure. Now it's been increased to $130 billion to $170 billion needed every year to invest and to build on infrastructure. So we now realize that the deficit is even bigger than what was initially assessed. And I think it's also where the opportunity lies. So essentially where you can finance infrastructure, some of our clients are actually in the building and construction of infrastructure. So I think there's a lot of opportunity from this deficit that the continent is facing.
And is there appetite amongst investors to actually seize that opportunity?
Absolutely. Unfortunately, when we look at financing infrastructure, 90% of financing is done by the government or municipalities, for instance, and only 10% from the private sector. So this is where Africa needs to work on changing and reforming their business environments, having the political will, and making it attractive for private investment to come into these markets. I definitely think there's lots of opportunity for that. We are seeing countries actually reforming their business environments to get more foreign direct investment, and in that is financing infrastructure specifically. Countries like Rwanda, for instance, Ethiopia, we are starting to see them opening the market for more private investment. So the opportunities are abundant.
Egypt is right at the top. It seems to be the most attractive investment market. Why is that?
So going back to the methodology, looking at growth, for instance, GDP growth for the next 5 years, and also the market size. Now, growth rates, it's much stronger than South Africa, which is actually in second place.
Around 4%.
Around 4%, where South Africa maybe 1.5% over the next few years. So it's much lower than what we see in North Africa and actually the rest of sub-Saharan Africa. But then also the market size. So Egypt is now for 2 years in a row the largest market in dollar terms in Africa, where Nigeria is now second. It used to be number one, and South Africa is number 3. So from an economic perspective, Egypt is much better than South Africa. From a business environment perspective, South Africa is still trumping most of those countries in the top 5 because we still have a very liquid market, strong capital markets and equity markets, and also very easy to repatriate your dollars in and out. South Africa is still seen as a very large player, still very attractive, and also the springboard still in investing into the rest of the continent.
One of the countries that actually slipped a bit, and which I think is actually reforming pretty well to try and attract investment, is Ghana. A few years ago it was an investment darling, but why is it slipping at the rate it is currently slipping at?
I think we shouldn't be concerned of whether it's what's happening in the Ghanaian environment. It's more of the other countries that's doing a bit better. So they've actually moved more quicker up in the rankings. Ghana's growth rate was actually readjusted by the IMF this year. The IMF just overestimated the oil production that will come online in 2018 specifically. So I think that has brought Ghana's ranking down ever so slightly, but it's still very strong growth. Ghana is still in the top 10 of your best business environments. So I don't think we should look at it as a negative. It's more other countries have been doing a bit better than what Ghana has over the past year.
Typically, which type of infrastructure project would attract private capital?
Well, let's look at public and private. So from a public perspective, it will be more into your socio-economic needs. So more in electricity, because that's what your people need, more in transport to get your people from A to B or your goods from A to B. For private investments, it's actually construction. So the bulk of investment is going into the construction sector, mainly because they're more short-term in projects. I mean, the risk is still high in Africa, so you want shorter than longer-term projects. But I think this is where the governments can step in. If they reform their business environments and make it easier for investors, then they will be happy to invest in longer-term projects.
Making it easy to do business, I think that is probably the crux. You need to be able to come in and without too much difficulty put a project together. Are we seeing that the whole continent is actually opening up and making it easier for foreign investors to do business there?
We can highlight a few countries, but let's paint Africa with one brush. Unfortunately, if you look at the numbers, so the World Bank's Doing Business report or the World Economic Forum's competitiveness report, unfortunately, there's not significant improvement in Africa's rankings. Only about 31 countries have shown a slight improvement in their business environments in the past year, compared to 36 countries the year before. So we're starting to see that stagnating. But the countries we can highlight, Ghana still doing well, Rwanda doing well. Again, your other East African economies are improving their ratings. We are going to see countries like Zimbabwe, and will probably jump in the ratings with a new political disposition. But of course, we need to see first if those reforms are being implemented. So that's a bit of a wait and see game. I do think there is still much to do. Sustainable growth is the biggest problem that Africa has. It's not doing that properly. And I think the theme that we are discussing, infrastructure, will only be able to happen if your business environment is becoming more easy, friendlier for investors to come in.
How important, well, obviously it's important to partner with a local partner to ensure that the cultural differences don't impede in the way you do business. But how critical is it to get the right partner?
Again, for certain countries you need it, other countries you don't. So in certain countries you can go greenfields. Your Southern African and your North African countries are specifically those countries where it's quite easy or easier to go in greenfields. In your rest of your Sub-Saharan African countries, I can mention a few. Angola, Kenya. It's not that you should have a local partner, but it's to the benefit. You don't understand the culture, you don't understand the languages necessarily. It's very good to have a local partner to help you through that process. They know the taxes, they know the markets, so essentially, just from that perspective, very easy to do business if you have a local partner. And other countries insist on having a local partner. Unfortunately, certain countries, we know Zimbabwe had the indigenization law, etc. So hopefully those regulations will ease a bit across Africa over the next few years, but unfortunately you have to do that in certain circumstances.
There's a big perception that China is colonizing Africa through many big investments in infrastructure. Is this the case, and are there other countries around the world that are actually targeting Africa as a premier investment destination?
In general, just on average, the amount of investment that has come in from your Asian economy, specifically China, the infrastructure building we have been seeing, the jobs that it has been creating. There is that perception that the Chinese are taking away jobs from the locals in Africa. It's not really the case. We actually have read McKinsey's latest report on the dance between the lions and dragons and how that relationship is going. And they've also said it's the problem is probably from a managerial position that jobs are being taken by the Chinese. But local jobs have been rising since with your Chinese investments coming into the market. Currently, there's about 10,000 private businesses active across the continent from a Chinese perspective. Not all of it is public, and that is also the perception that it's just public coming into in Africa, and it's not. And we have been seeing that number in dollar terms just growing significantly in the past few years. So I think more benefit than it is to the detriment. And yes, we are seeing other countries investing quite heavily. We just recently had Prime Minister Theresa May coming from the UK, and also we have seen that China, for instance, a few years back at one of the summits, investing or saying they will invest $60 billion. India also have come in. It's much smaller amounts than what we see from China, but what India is also doing is focusing on different sectors than what China is necessarily focusing on. China's more still resources-based, where we can see India, for instance, coming more into your healthcare, pharmaceuticals, for instance, or in education.
Celeste, thank you for sharing your insights today.
Thank you.
That was Celeste Fauconnier. She is an Africa Analyst at Rand Merchant Bank and one of the authors of the Where to Invest in Africa report.